how would you describe to people who are skeptical? Because everyone's like, wait, how's that even possible? Why is the bank giving me 0.01% and Celsius can give me 10% or 6% or 5%? How does that make sense?
Well, it doesn't make sense. For most people, when the bank tells you that the rate is 0.1%, you see it, one bank, second bank, third bank, the fourth bank is 0.15%. You say to yourself, okay, well, that is the rate, right? If all the banks, and these are all big banks, they have big offices, big buildings, beautiful, lobbies. You're saying to yourself, they know what they're doing. They're pros. So if they say the rate is 0.1%, that must be true, right? So if you look at the rate the banks have been paying over the last decade or two, you will see that the rate has come down every year, and it actually come down directly in correlation to them buying other banks, right? So they consolidated the banking world. There's the fourth largest bank in the United States have something like 60% of all the deposits, right? Bank of America, JP Morgan, Chase, Wells Fargo, and which one am I missing? Citibank, right? So those are the largest banks, and what you have to ask yourself is not what they're paying you. You have to ask yourself, what are they paying themselves, right? So they're all public companies, and they all brag about their earnings to their shareholders. So if you, instead of looking on their website at what they're telling you you should be earning, go on the SEC filing, go and do a search for JP Morgan Chase quarterly earnings and see how much money they're giving their shareholders. And you will find out that they're making between 15 and 17% return on capital, meaning yield on their capital, right? They're paying that to their shareholders, either in the form of a dividend or a stock buyback or a bonus to their employees or anything like that, right? So if they can pay themselves 17%, right? Wouldn't it be fair if they paid themselves 10% and gave you 5 or 6%, right? Let's split the pie. Should everything go to the shareholders, or should we split some to go to the depositors and some to go to the shareholders? So when I say these things, people look at me and say, Alex, come on. I mean, the Fed has low rates to zero. So banks are making no money. No, banks make more money than ever before. The banks have never made more money than they make now. So the rate the Fed pays, or the rate the Fed dictates, has nothing to do with what they can pay you. I'll give you a simple example. Back 10 years ago, when the Fed rate was 4 or 5%, bank charged you 24% on your credit card. Now the Fed charges banks zero, right? They lowered the rate from 4 to 5% to zero. So now their cost of capital went down by 5%. Did your credit card go down from 24% to 19%? So you have to understand that while the Fed is lowering the cost of capital for banks, banks continue to charge you an ATM fee and a withdrawal fee and an inactivity fee and an overdraft fee. You name it, a fee upon fee, right? They're pros at charging fees. So all that money, and none of it is directed towards the depositor, right? Why? Because they are so dominant that they don't have to pay. What are you going to do? If you try to go into your bank account and to your bank and demand to know what is the bank doing with your money, who are they lending it to, what is the interest rate, and how much of it you're getting, right? Just they're going to laugh at you and throw you out of the bank and close down your bank account because they don't need you as a customer. But those are all the things that Celsius shares with its customers every week. Every week, we tell all of our customers how much we received in deposits from the community, what did we lend out, how much did we earn, and we give 80% of that back to our community, to the depositors. 80% of it goes back to the depositors. So in 700 years of banking, since the Medicis started banking in Italy, in 700 years, there's never been a crazy banker, not even one crazy person, who thought that they should give their customers 80% of what they make, right? After all, traditional banks keep 90 to 95% of what they make. They give their customers a fraction of 1%, right? So that is what's so hard for people to understand, because you were conditioned over many years to not earn anything on your money. People assume that that is just how it's supposed to be. But rich people, right? And I'm one of those rich people. If I go and I give my money to Goldman Sachs and I give them $100 million, the agreement between me and Goldman Sachs is that I'm the LP, the limited partner, and they're the GP, the general partner. And I get to keep 80% of what they make. That is the agreement between very rich people and the banks, very rich people and their money managers. So all Celsius did is took what the very, very rich people already have and gave it to a person that has $100 and said to him, look, we're going to treat you as if you have $100 million, even though you only have $100. And I'm the largest user of Celsius. I have over $350 million of my own money in Celsius. In percentage terms, I earn exactly the same thing as somebody who just joined Celsius and put $100 to work. If I earn 10% on stable coins, you will also earn 10% on stable coins. If I earn 6.2% on my Bitcoin, you will also earn 6.2% on the Bitcoin. And that's what has never been done before.